now by geopolitical situation, as we all know. Of course, this will be a watch out, but we are no stranger to commodity inflations. We've been seeing cycles in the past as well, and recent past as well. We will continue to navigate this space through a combination of judicious price increases, cost savings, and of course, broad-based portfolio growth, including premiumization of certain models that we have. Coming to growth, of course, the macro indicators are really looking good. The GST collection we have all seen is all-time high in April. The e-way bills have picked up. Almost all, in fact, I would say all sectors of economy have opened up. Grain prices are high. They're augmenting rural income. The monsoon forecast is decent, and so on and so forth. It's clearly evident also that while COVID may not have gone away, but we've all learned now to get on with our livelihood, and hence the consumer confidence and spending is bouncing back easily and actually solidly. Already we are seeing signs in April, and we have no reasons to believe why two-wheeler industry can't grow double digits in FY23. We will have multiple product and variant launches in the coming fiscal, and added with all the actions already taken, we are confident of gaining market share and hence going ahead of the industry. So with that positive outlook that we have on the industry and our market share and our growth ahead of the industry, let me now open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We request participants to please limit their questions to 2 per participant. Should you have any further questions, you may please rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gunjan Prithyani from Bank of America. Please go ahead.
Yeah, hi. Thanks, team, for taking my questions. 2 questions. Firstly, on the demand side, you did allude that, April we are seeing early signs. Could you share a little bit more color on, what is it that we are seeing on the ground? And, where are we in terms of channel inventory? Because there are a lot of these supply chain constraints that some of your peers have been calling out. So maybe, give us some perspective. Is there a challenge on the supply side that you all are also facing? That will be the first question.
Hi, Gunjan. That was 3 questions in question 1, but that's okay. Let me hand over to Rajiv to address this. Rajiv, over to you.
Yeah, hi, Gunjan, and hi, everyone. This is Rajiv here. I'm the Chief Growth Officer. This is the first time I'm talking to all of you, and I look forward to catching up with you. And I request Umang to set up some time so that I can get to know you guys better. I've worked in, just take a minute to introduce myself. I've worked in some of the other companies where we may have interacted, like Samsung and Unilever, etc. So here's, April is looking good so far. We've had an upside thanks to the marriage, thanks to the festivals. We set off a really good note with Gudi Padwa and many other, you can see many auspicious dates. Retails have been good, dispatches have been good. As far as the inventory is concerned, we've actually been able to bring that down to about 6 to 7 weeks as we speak today, which is a better situation than we were at the end of the quarter. So that's another indication that you've got. And overall, the momentum is pretty strong. When you look at the entry level, we have gained market share. Month on month, over January, February, March, we exited at for the full year at 62%, but in March we were at 74%. There were some campaigns that we did around mileage, and that really helped reinforce the key strength of Hero Motocorp and of HF Deluxe and build confidence in the market. Splendor's done extremely well. We're at 82% market share in March. So that's, again, a great testimony of the momentum that we've got. And overall, it's been a good start to the year.
Sure. Good to hear. No supply chain constraints, right?
Yeah, so supply, typically, as we are going along, there are supply on the chips side shortages that we face, which are very similar to what the industry faces. But I must say, and I must compliment our supply chain team for having managed the situation well. Of course, demand outstrips supply in some of our key products like X-Pulse. We've had a record month in March where we sold 5,000 retails of X-Pulse, and that continues. Glamour X-Tech is also doing great in terms of, the marriage season. It's in good demand. And as we get more supplies of the chips, I'm sure we'll get even better in our positions across these segments. So we're managing the shortage, but overall, I would say it's going pretty well start to April.
Sure. The second question was on the margin. Now, I clearly see some gross margin expansion in this quarter. So, maybe just give us some sense on, what has led to it, price hikes, leap, mix, what is it? And why is the other expenses higher in this quarter?
A couple of things, Gunjan. One is the GM expansion is, like you yourself answered, is a combination of price hike that we've done, as well as LEAP savings. We've always talked about our accelerated LEAP 2 program, which has generated almost around 300 basis points of savings in this quarter as well. So that we continue to put pedal on, because that's the way to navigate the high cost inflation era, and you've seen us doing that in the last 2 years. On the other expenses, there are some phasing things. As you can see, CSR expenses more towards Q4. So if you take those phasing into account, I would actually advise to take a full year picture on the other expenses to get a sense of the overall annualized run rate of the other expenses.
Thank you. Thank you.
Thank you. The next question is from the line of Kapil Singh from Nomura. Please go ahead.
Yeah, hi sir. Could you talk about what is the price increase that we have taken in current quarter, and what is the cost inflation that we are seeing, and the overall outlook for margins for next year as well?
Hi Kapil. As far as price is concerned, we took around 1,000 rupees, at an ex-showroom level price increase in April first week. As far as cost inflation is concerned, as I've always been saying, it's very difficult to call out what the inflation will be. But effectively, we know that all commodities are going up, and our way of managing that would be a price increase, which we have done. We'll calibrate it moving forward, in different quarters and different periods, as well as the savings program, which we continue to accelerate, and we will do on overheads as well. So that's the way to continue to manage. Obviously, at some stage, the commodities are expected to cool off, and we have to wait for that for expansion, if any, on the margin side.
And the second question was on, growth, particularly for ICE industry. Do you see that we have, obviously there is a base effect, but beyond that, do you see that for next few years, ICE industry can keep on growing? And I see that for Hero in particular, the scooter sales, which used to be around 8 lakhs, have come down to nearly 3 lakhs. So how are you thinking about, will EVs be our growth engine now, or are we fully focused on ICE as well?
Yeah, Kapil. So as far as, industry is concerned, we have to take into account the kind of shocks that the auto industry has gone through in the last 3, 4, 5 years. Yeah. I haven't seen at least any industry going through such shock waves and still being resilient in terms of being at the volumes that it is, whether it was BS6 and the cost inflation and the pandemic shutdown, and then the geopolitical things that are happening. So I think we have to go back fundamentally to the penetration levels, which are still under-penetrated as compared to, if you take comparable Southeast Asian countries, we are still probably at 1/3 of what they are, and therefore there's a huge scope. And it's not just a base effect, it's a long term. And within that, there's also the GDP factor, and we know that our economic growth has been soft because of the pandemic and those reasons, and which is going to bounce back as all the other indicators are. So I think if you combine the economic outlook along with the under-penetration, there is a solid case for industry to continue to grow for the foreseeable future. That basis doesn't go away because of a few quarters here and there. As far as the scooters is concerned, Yes, our scooter partly also in Q4 that we had brought down the inventory and therefore retails were a little higher. We got job to do. In scooter. We are going to launch variants around X-Tech similar to what we have done in motorcycles, and we'll continue to peg at that in order to improve our market shares. Apart from that, as far as EV, it's not that, by focusing on EV, we are taking pedal off the scooter. So we'll continue to focus on scooter gain because we have not reached anywhere close to our fair market share, which is there. So there is ample scope there. And of course, as far as EV is concerned, you know about the launch that will happen. So we'll navigate both the spaces.
Okay, thank you. So we expect ICE industry also to have growth for next 2 years. That's what you would think.
Yes, Kapil, there is no reason to believe why the growth will get stalled.
Okay. Thank you, sir. All the best.
Thank you. The next question is from the line of Raghunandan NL from Emkay Global. Please go ahead.
Thank you, sir, for the opportunity. My first question was on EVs. The production is likely to kick off in AP plant from July onwards. Can you provide some details on capacity and volume expectations? Also, the Gogoro Hero tie-up was expected to come out with a product in CY22. Does the timeline still remain?
Raghu, let me just start off and then I'll ask our EMBU head, Swadesh, to actually pitch in. So as far as, the capacity is modular. So depending on what we want to do and the cities and the plan which will get unveiled, of course, on July 1st, we can always augment it. It's not, it doesn't require to actually create a huge mammoth capacity right now to feed anything. It more depends on our plan as to which are the cities we want to go first and then next and then next. So I think that's where it will depend on. And of course, the volumes part as well. As we said, the primary focus will be on quality and safety, apart from, of course, giving competitive features and pricing. I think that will be our core plan, but quality safety will be first, and that will also determine what our trajectory of launches and the expansion is. As far as Gogoro and this one is concerned, obviously we want to phase out things in a manner that once our launch comes with some space that comes, we're still sticking to that in FY23 we should be able to put in the product on the swapping system. Swadesh, you want to add anything?
Yeah, thanks, Niranjan. Hello, Mr. Raghunandan. This is Swadesh, head of EMBU at Hero, and hello to everyone. I think Niranjan covered, most of the points there, but just to bring back the focus on the Gogoro product, it is well planned to be released this year. And since we'll be coming out with our own homegrown product very soon, and want to make sure there is enough room for both the products to gain the market, you will definitely see both these products coming out in a good period of time during this year, right? And more details on the cities and the volumes you'll hear on July 1st. Thank you.
Thank you for this. All the best. My second question was on Ather. Just wanted to clarify the investment amount. So Q4 investment stands at 1.5 billion, and the total investment expected is up to 4.2 billion, which was announced in January, and this investment will happen in a staggered manner. Is that understanding correct? Also, any update you can provide on Ather valuation in the latest investment round?
Right. So Raghu, firstly, let me answer the second question as the easier one. So I'll refrain from valuation on Ather. They can talk about it. We'll refrain from that. But on the funding part of it, yes, I'll convert into crores. I usually associate billions with dollars and crores with rupees. So allow me that. So 150 crores is what we invested. The total contribution that we talked about is 420 crores, like you said. And it's likely to happen in this quarter itself, the balance, which is 270 crores.
Thank you, sir. That's very helpful. Can you share the spares number if you have it handy?
Yeah, I can share the spares number if you want, which is for the quarter it is 1151 crores, the parts business revenue, and last year the same quarter was 1049 crores and quarter 3 was 1186. So that's a growth of 10% year on year. For the full year, we did 3,933 crores versus 3,178 crores last year, which is a 24% growth. And as a contribution to revenue, for this quarter, it stands at 15.5, but better we look at full year basis, which is 13.5% to revenue, well above the 10%. We used to be in single digits, if you remember, some time back, 3-4 years back.
Thank you, sir. That's very helpful. I'll come back in the queue.
Thank you. The next question is from the line of Pramod Kumar from UBS. Please go ahead.
Yeah, thanks a lot for the opportunity. And this is a question on the demand recovery side. I understand that you've seen pretty good retails in the month of April, and outlook for May is good. But if you can just help us understand how much of this is kind of marriage season demand, because this is the first season of it in the last 3 years, right? So if you can help us understand how much of outside of the marriage season and outside of the marriage season market, how is demand faring in April and especially towards the start of May, so that we can get more confidence on the sustainability of this demand once the marriage season kind of rolls out or ends by around May end or something like that. So if you can just help us understand on the demand side in more detail, please.
Right. Hi, Pramod. Let me hand over this question to Ranjiv. Ranjiv.
Yeah, sure. So, the good thing is April, May, and June, right up to 15th of July, have very much auspicious dates for marriage. And in fact, it keeps building. So May and June will continue to be very robust. Besides that, we've seen rural, that being a driver as well. All of you know about the way agriculture is, the wheat procurement, the exports, all of that are positive signs that are coming through, and we are seeing that in our business across two parameters. One is in rural, the second is semi-urban. So both of those are looking strong, and so overall, it's a very, I would say, evened out quarter that we're going to be seeing as we go along. So we've had a very good Akshaya Tritiya. That's been a very positive. Last year was pretty truncated. This year was good. Padwa sales were positive. So we are seeing spread across, all across. Even Ugadi was a good period that we had. So it's very well spread out is what we're seeing right now.
And just as a follow-up to that, Ranjiv, what level of inventory are you comfortable with? Because you're coming in here as a growth officer, and you come from an industry which is also pretty strong on network on the electronic side. So if you can help us understand your perspective as to what do you think is the right inventory level at which you should kind of operate, because some of your other peers have much lower inventory levels than what you guys carry, and because that kind of has an impact on the incremental wholesale performance. Like, for example, if I pick April, there's a good 70,000 kind of a gap between your wholesales and retails being higher based on Vahan. So if you can just help us understand your philosophy around how you see the network and also any scope of network expansion from here on.
Sure. So, look, at the scale at which we operate, we are the largest, not only in India, but also across the world. There is a certain amount of expectation that our customers have in terms of service levels, of having the product, the SKUs available to them. We're pretty good with 6 weeks, as a norm. And I'm really happy to say that today we are around that zone. So with the upsides in terms of the demand forecasting, as well as better in terms of how we are matching the inventory to the demand, I believe we are well placed. In addition to that, we are investing and expanding in the secondary networks. And that again requires the inventory to be placed, in a little bit more, I would say, far-flung rural areas. And that again is working to our advantage. So 6 weeks, given the complexity of our business, the number of SKUs, the geographies that we operate in, I feel is a very good position. So we're well positioned for this quarter and as we go forward.
And second question is, thanks a lot for that. Second question is on Niranjan. Niranjan, we've always maintained that the medium to longer term margin range for Hero is 14% or thereabouts. I think you mentioned a band as well historically. So how should one look at that going into FY23, because we're going to have volume growth coming back, which will be offsetting operating leverage after a gap of almost 3 years of decline for us. and exciting new launches and more premium products getting out in the marketplace, and the commodity intensity. So how should one look at this, as in what outweighs what, and how would you like, what kind of margin profile you would be comfortable as a CFO?
Yeah, so Pramod, the margin profile comfortable as a CFO is the medium range guidance that we have already given. Yeah. Now, having said that, there are always, moving forward, there are headwinds and there are tailwinds. The headwind clearly is the cost inflation, commodity inflation, and we've been taking a very sensible price movements in the market because we don't want to destroy the demand, and equally we don't want to hurt our margins too much. And you've seen that calibration happening across the quarters, and we've been sensible about that, and we'll continue with that. Second plank, of course, is cost savings, which is a positive for us, and a lot of programs, and that will continue. And you are absolutely right. The other positive that will come this year will be the operating leverage, because we've been suffering with the negative operating leverage for the last couple of years, and therefore that will come positive. Now, how much that gets translated, etc., the margin recovery will follow. But the point is that we don't give guidance for an FY23. But these are the factors that actually weigh in, both on the positive side and on the negative side. And the other, of course, like you talked about, is premiumization. For instance, all the X-Tech variants that we are launching, some which we have launched, some more will follow across all the models. They're all priced between 7 to 10% higher than the base variants, and they are doing well from the demand side. So I think we continue to navigate very sensibly from a portfolio perspective, from a pricing perspective, from a savings perspective, and now from a volume perspective, which will come for the industry and for us, should be well placed. But we'll have to navigate this space. The medium range guidance doesn't change.
Okay, and the last one, space should stay in the momentum in terms of as a percentage of revenue. You've been holding the 15% mark for last couple of quarters. So should one expect that kind of momentum to continue going to FY23?
You're talking about the parts business?
Yeah, parts business. Yeah, sorry. Yes, domestic plus exports.
Parts business, Pramod, we've been continuously moving it up. We used to be between 7 to 9%. We crossed 10%, 12, now 13 now. There are organic measures that are already in place, whether, as I said, increasing the range or the deepening the distribution. So percentage as of now, maybe not a number to look at, because obviously, if we end up gaining huge market share on two-wheelers, that relatively go up and percentage may seem lower. But having said that, we do expect the PAM business to continue on the growth trajectory. We have lots of opportunities there.
Thanks a lot, and wish you both all the best. Thank you.
Thank you.
Thanks a lot.
Hi, this is Umang. May I request everyone to please keep their questions to two at a time. Do come back in the queue right after.
Thank you. We'll move to the next question from Rohil Gandhi from PPFAS Mutual Fund. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just had one question. It's regarding the trade payables. So I just want to understand, your payable days have significantly gone up if you look at it from a full year basis. So can you just speak about that a little more?
Well, payable days, you could be looking at an aggregation. Our credit periods have not gone up, nor are there any overdue payments. In fact, if you look at the trade payables and balance sheet on a year-on-year basis, which is this year's trade payable versus the last year trade payables, the trade payables are lower because of the lower production, which has actually happened. When you convert into number of days, sometimes which part you are converting, the quarter or the month or the fortnight, because those numbers would not be available in published balance sheet. So you may arrive at a certain number which is not representative. But none of our payable dates or the creditor dates, nothing has gone up. Everything is actually in sync. Offline, of course, we can get chatting and we can give you more data if you require.
Thanks so much, and good luck.
Thank you. The next question is from the line of Amin Pirani from JP Morgan. Please go ahead.
Yes. Hi. Thanks for the opportunity. Just wanted to go back to the other expense line item. I mean, you had some very attractive financing thing in 3Q, and I think in 4Q as well. Is the sharp increase to some extent to do with the kind of subvention you may have had to give, or is it just, a quarter-on-quarter thing that we should not really focus too much on?
No, I mean, it's got nothing to do with the financing subvention. That's actually a very low number. It's not material to the overall other expenses. It is by and large one item, of course, is the CSR spend. As you would see, because of the pandemic, we were not able to complete the projects which are completed in quarter 4. So that itself would account for almost around 50 to 60 basis points of elevated spends in quarter 4, making up for the full year obligation of the CSR. And there are a couple of other items as well. So overall put together, the better number to look at will be the annual number in terms of when you want to look at the trajectory and the percentage revenue.
And what is the financing share for fourth quarter? And as you're seeing this improvement in retails, is there any sharp shifts either ways? And how do you think this number could move during the year?
So I'll first talk about the number, and then I'll ask Ranjiv to talk about more about the financing and what he sees. The financing overall in quarter 4 was 54%. And FinCorp share, so you haven't asked, I know the question may come up later on, is close to around 34% out of that. So the share is in the trajectory. FinCorp has been around 35 to 40%, give or take, here or there between the quarters. But our financing penetration has been going up. For the full year also it's 50% plus now. It's almost 52, 53% compared to 49% last year. But let me hand it over to Ranjiv to talk about more about what's the financing picture, what's happening in the retail, the requirements, driver of growth. Ranjiv.
Absolutely. So, look, this is an inflationary economy, and we know that our customers really need that help in terms of financing. A large part, 65-70% of them are first-time buyers. They don't have a credit history or a rating. And so it's really important for us to be able to serve their needs, and that's what we're doing. We're actually aggregating a lot of financiers who are helping these customers out, and that's how you see the numbers also growing from the 49% to the 53% as we've seen. And going forward, that's going to be the name of the game, and pretty much across not only urban but also semi-urban and rural. We're going to be holding the hands and making sure that the financing is there for the people who really need it. So that's going to be a big growth lever for us and a big growth driver and an enabler for our customers to buy Hero products.
Great. That's actually good to know. I'll come back in the queue. Thank you.
Thank you.
Thanks.
The next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, sir. You shared that the inventory number as of currently is around 6 to 7 weeks. What was the number at end of March quarter?
7 to 8 weeks.
Okay. And secondly, can you share the April retail numbers in April, retail volumes?
Ashutosh, we don't share the retail numbers. So on that, we will not.
But is it meaningfully higher than wholesale, or how should one look at it?
It is higher than wholesale because our inventory has gone down, so one can actually do a back calculation to see that the retail numbers are higher, and that's what has led to inventory correction.
Okay, thank you. That's all from my side.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi. A couple of clarifications. One is on the other expenses. Is there any higher expenses related to the Vida brand launch? Can you quantify the number if it is material?
Yeah, Jinesh. So this also includes, like I talked about, this combined with the CSR spending overall put together. You could say around 80 to 100 basis point overall is the impact, which is into other expenses for the quarter, which includes, of course, the CSR expenditure that I talked about as well.
Okay, so the Vida brand launch would be close to about 30-40 basis point extra expense. And secondly, was there any impact of RM costs or commodity costs in fourth quarter, or was it broadly stable on QOQ basis?
No, RM costs actually got neutralized also because of leap savings. We had accelerated leap savings delivery in quarter 4. So that's why you see also the way I think you guys also see the gross margin, though that's not the definition of gross margin, but let's say the margin rate of material costs has moved up because of that, so we haven't seen that. Moving forward, of course, in any case in the industry, the commodity cost, what is get reflected in the indices and the market, comes with a lag of a quarter across the industry. That's the general thing that happens. So therefore, it will come out in quarter one, quarter two.
Yeah, because many of your peers have indicated commodity costs are stable on a quarterly basis in the P&L. So hence, just wanted to understand that's stable. Okay, got it. Got it. Last clarification on the chip shortages. Fair to say that our core portfolio of 125cc is not impacted by chip shortages?
I mean, by and large, yes. I mean, in a sense that, apart from some of the variants that we've launched, which is X-Tech variants and some variants which have connectivity, etc., so some variants. So if you look at our overall portfolio, I mean, the way to look at it is that as an overall portfolio, what percentage is impacted in terms of volume numbers because of chip shortages or supplies, or what is dependent on chip shortages, that is immaterial. That's actually a very lower number. And then Ranjiv also talked about how we are managing it. Ranjiv, any further comments on this?
No, it's just that, of course, the shortage does affect at the top end, the more connected ones, those SKUs, and those are in demand. And as we keep working on it to improve the supply situation, which is really something that's happening on an everyday basis, we are seeing improvements in our supply. So we will continue to make all our efforts to make sure that we plug the gap because, it's important to serve the customer at that end as well.
Got it. Thanks. I'll fall back into you.
Thank you. The next question is from the line of Hitesh Goel from CLSA. Please go ahead.
Yeah, thanks for taking my question, sir. Just wanted to get a sense that government had said a few days back that no EV launch can happen, no new EV launch can happen by any player for next 1 year as they're investigating this fire issue. Is that sorted out? Because you're talking about a launch this year, right, on Gogoro and your own product?
No, there's been a clarification that there's no official notification or direction from the government to that extent. All they are doing is they're examining the scooters that have caught fires and trying to understand that and then ensuring recall and safety measures. But there's no ban by the government on EV launches. That's very clear.
Okay. And on the RM cost inflation for first quarter, can you quantify, is my understanding right that there could be around 400 bips under recovery in first quarter and you would have taken 2%, half of that, most of the industry is in that ballpark. Is that calculation in the ballpark or I'm totally off?
No, I won't quantify because, this commodity inflation, honestly, I have even seen most of the big experts also faltering. So I won't venture into that area. But yes, we can all see that the commodity costs have gone up and that will impact quarter one, quarter two. And as I said, we have actions lined up and obviously we will endeavor to recover the cost in more ways than one. That would be our target, but as it happens, we will navigate the space. The number seems very high, what you're quoting here.
Okay, great. Thank you, sir.
Thank you. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yeah, hi. Good afternoon, and thank you for the opportunity. First question is on the mix of your customers between, say, first-time buyers and replacement customers. I think in one of the comments you alluded it's about 65-70% is first-time buyers. I noticed that this probably is higher than what we had seen last year. So could you kind of just give some comments on that and probably let us know what the numbers are?
Okay, I'll hand it over to Ranjiv to answer about the first-time addition and the replacement buyers.
It's actually pretty consistent. That's the nature of the market. Personal mobility is a key need in this country. Again, across all parts of the country participate in this. And therefore, first-time buyers are in the region of about 65 to 70%, depending on, in the commuter segment could be a little higher, in the premium segment could be a lower, but on average, that's where it is. And then there's the replacement and the additional, which are pretty much equally split in the balance of about 30-35%. So that's a very consistent thing. Our attempt as a brand, being the world's largest and being a very inclusive brand, is to invite more and more people to get their own personal mobility solutions from Hero Motocorp, and therefore we have the portfolio structure that we do, and we have the ways in which we have the dealerships that are spread across the country. We have the widest network of dealerships. We also have the retail financing that enables our customers to be able to participate in that journey. So actually, I believe it's a very consistent story that we are building on, and that builds trust for this brand over a period of time in a very consistent way.
Sure. Thank you for the clarification. Second question is on EVs. While we do get a sense of the high-speed EV numbers, there seems to be a lot of these low-speed EVs, with volumes obviously something that we wouldn't be able to track because these are not registered and it's probably below the radar. So could you give a sense of, are these even having any impact on IC volumes, especially in, say, rural and the semi-urban markets, which is where a lot of these low-speed EVs, seem to be getting sold?
Hi, Mukesh. This is Swadesh. I think that's a good observation. Definitely, there is more sales happening on the low-speed, low-range segment. Although a lot of new products are coming out in the higher range, higher speed segment over the last few months and going forward. So you'll see much more uptick there. But when it comes to impacting the ICE market or the ICE business, I think what you're seeing in the low range, low speed is a lot of people who have short errands to run, or people who are in a age group or the demographic that they are not able to handle other form factors. They are really going into that. Right now, it is not really eating into the ICE market, but I think given the momentum, I think new use cases are coming in for those form factors. And going forward, you'll see the high speed and high range scooters also ticking up in the EV segment.
Right. So is there a case for companies like yourself also getting into that low speed segment to cater to that specific form factor requirement?
See, I think right now the EV industry is actually in quite a nascent stage. So you will see different use cases coming up, right? And I think we want to definitely play to our strength. And we have both our own homegrown product and the Gogoro partnership product. Both are well positioned at the heavy and prominent use cases because we want to make sure that we are catering to those customers. But over a period of time, will we not come in all the use cases? And given our portfolio on the ICE side, we will do the same on the EV side as well.
Right. Great. Thank you for that. I'll get back in the queue.
Thank you. The next question is from the line of Sabyasachi Mukherjee from Centrum PMS. Please go ahead.
Yeah, hi. I just have one question. Seek your comments on the income tax issue that was there in the news a month ago.
Yeah, Sabyasachi. So therefore, if you read notes 9 to the account, we have explained our comments and our status on that. And beyond that, I would have nothing further to add at this stage.
Okay. Thank you.
Thank you.
Thank you.
The next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. So I have two questions. Firstly, on scooters, in the last 3 odd years, we have tried to do a lot of work on that front in terms of product launches, pricing intervention. We have also got into 125cc segment. We have seen bouts of market share increase, but then again, we have started to lose now. So what, according to you, is not going correct? What are your on-the-ground checks suggesting that despite having good products, despite having a reasonable portfolio, we are not able to scale up market share? So any feedback or anything that you think is not working, and how do you want to focus on that going ahead?
Yeah, allow me to take that. This is Ranjiv here. Look, we've actually had an excellent launch of Pleasure X-Tech. Let me start with the 110cc segment. And the X-Tech launch, along with the campaign on Ladki Chala Rahi Hai, which was a very dramatic and powerful point of view that was expressed to consumers, and there was a lot of engagement around it. The market liked not only the product but also the brand building that we did, and it's held very strong in terms of its market share. We will further strengthen our 110cc segment as we launch more products. As we said, we will roll out more X-Tech ranges as we go along in this year. So watch out for that, because that is going to increase our play in the 110cc segment. As far as the 125cc segment is concerned, the Destiny X-Tech has already been shipped. We have dispatched that in March, expanding it to other markets within the country in terms of the inventory, and it's got a very positive and good response that we're getting across the board for Destiny X-Tech. With the chip shortage situation getting evened out, the Maestro Edge 125cc, which is the connected series, will also become a far more powerful player. So we're very confident across our portfolio on the scooters that this year, with this lineup that we have and the X-Tech series, we're going to really make a mark. So I can just reiterate that it's a very good lineup. The consumers are responding well, and we will see us making gains in this as we go forward in the scooter segment.
Got it, sir. So my second question would be on the exports front. That is one area where we have started to do very well in the last 1 year or so, and we have appointed some good distributors in important territories. But obviously, our base is still much lower than some of the other players in the industry. So can we expect growth which is much faster than the peers and a faster scale up on the export front so that we reach maybe 500,000 export or plus in the next couple of years? Just wanted some color on that on the export side.
Thank you very much, Nishit. I was 45 minutes into the call, I was wondering, you guys have given up on our exports, or are you still hot on it? I'm glad you asked that question. I think we've had a fantastic year, as you can see. You can pretty much imagine the amount of support that we've got from all of you all these years, inspiring us to keep going and pushing forward. We've just made the start. We're getting absolutely aggressive about it. Some of the numbers that you are already talking about are quite exciting. We certainly look forward to getting somewhere close to that. Yes, of course, the growth trajectory is going to stay robust and solid going forward. We have, this year itself, done better than competition. Our market share increase gives you that story. So, all in all, we are on the right path now. The aggression is pretty much there, and so is the sight for a very aggressive end state position. Hopefully, things will change much faster than they have in the past, and we are pretty much on track. Thank you.
Thank you, and all the best.
Thank you. The next question is from the line of Jay Khare from Elara Capital. Please go ahead.
Yeah, thanks for taking my question. So my first question is regarding the two-wheeler industry. As a market leader, how do you see this industry? Of course, we are approximately, FY22, we are around 35% below the FY19 volume peaks. Now, in FY23, you mentioned about growth, and we may have a, double-digit or maybe close to 10% growth as well. But, how, in your internal assessment, what growth level do you see is, you would be satisfied with from the low base? Because we've also seen around a close to 40% the price increase in the last 3-4 years. So, would you think that 10-12% growth in good enough? And what is your definition of a satisfying growth rate? And in continuation to that, do you think over the 2 to 3 years you will be able to scale back to the FY19 volume peaks of industry of 21 million? Or you think that is a far-fetched given the price increases that we've already seen?
Right, good question. So very difficult to call out that what will be a satisfactory level, right? Obviously, everyone would like to go back to the FY19 peak as soon as possible. So that would be the definition of where the satisfaction lies. I think, again, I go back. We've got to look at fundamental underlying factors which play to the long-term growth of two-wheeler industry. All those factors are intact. And I'll repeat those, whether it is an under-penetration, the need for mobility, whether it is a pent-up that has happened in the last 3-4 years, the big pool that is developing, which should actually now propel the replacement demands to be much, much, much bigger. And of course, financing. Because remember, financing penetration should be nowhere less than 75 to 80%, which is what four-wheeler financing levels are. And the moment they go up, then people are actually then effectively means that you are preponing your purchases rather than saving and spending for that. So I think the fundamental growth levers remain intact. How fast it happens, we will have to see. And of course, underlying or overplaying all that is the economic growth, the consumer confidence. Rural income, for instance, has been there. It's not that during pandemic the rural income suffered. We all know that the GDP came out of rural growth. It was about willingness to spend because of having not enough confidence about future because of COVID. And second is dependency, more dependency of family members on the same rural income because of migration of labor. So I think there are those sectors that played out. Now with all the sectors opening up, people have moved back to urban areas, the industries have opened up, crop prices are up, agri crops are looking good, income is looking good.